Section 5. Reading the loan estimate. The first page tells a story. Section content. Sarah, can you help me read this thing? Emily and Carlos have made it through the beginning of the TRID process. They applied for their mortgage. They received the loan estimate. They told Jason they wanted to proceed. They've even learned that not every estimated charge is treated the same way. Now Carlos finally asks the question we probably should have expected from the beginning. Sarah, I know Jason explained this, but can you help me understand what I'm looking at? Sarah opens the loan estimate. 3 pages. Boxes, numbers, percentages, estimated payments, closing costs, cash to close. Carlos laughs. I thought buying the house was the complicated part. If you've ever worked with a first-time buyer, you've probably had some version of this conversation. So let's make the loan estimate less intimidating. Start at the top. One of the easiest ways to review a loan estimate is simply to start at the top of page 1 and work downward. The form begins with basic information concerning the transaction and loan. Emily and Carlos should expect to see information identifying the applicants, the property, the sale price in a purchase transaction, the loan term, the purpose of the loan, the product, loan type, and other identifying information. Here's where an agent can be useful without becoming a lender. Sarah knows the property Emily and Carlos are purchasing. If the loan estimate identifies the wrong property address or a transaction figure appears inconsistent with the purchase contract, Sarah can recognize that something deserves attention. She shouldn't silently assume the lender will catch it later. Now look at the loan terms. Next comes one of the most important sections on page 1, loan terms. This section includes major information such as the loan amount, interest rate, and monthly principal and interest. It also addresses whether certain features apply, including a prepayment penalty or balloon payment. Imagine Carlos tells Sarah, Jason told us we were borrowing about $420,000, but this says $435,000. Does Sarah explain why? No. She says, that's something we should have Jason clarify immediately. That's the pattern we're building throughout this course. Recognize, communicate, document, refer. The loan estimate gives the consumer a place to identify questions early. Is the interest rate locked? Emily points at the interest rate. That's the rate Jason quoted us, so we're locked, right? Careful. The loan estimate contains information concerning rate lock status, but seeing an interest rate printed on the form doesn't mean Sarah should independently tell Emily what contractual commitments the lender has made concerning that rate. Interest rate locks are important because rates can move during the transaction. If Emily wants to know whether the rate is locked, when the lock expires, or what happens if the transaction extends beyond that period, those are questions for Jason. Sarah should care about the answer because it may affect the transaction, but Jason should explain the lending terms. The payment is more than principal and interest. Now Carlos sees the monthly principal and interest amount. Great! That's our house payment. Maybe part of it. Scroll down to projected payments. This section helps consumers see that the amount leaving their bank account each month may involve more than principal and interest. Depending on the loan, projected payments may include mortgage insurance and estimated escrow amounts. The form also provides information concerning estimated taxes, insurance, and assessments. This matters because buyers sometimes emotionally qualify themselves based on one number. Carlos thinks, I can afford $2,700. But what does he mean by $2,700? Principal and interest? Total estimated monthly payment? Does that include property taxes, homeowners insurance, mortgage insurance, HOA assessments? Those differences matter. The Arizona property tax conversation. Here's an Arizona-specific issue agents see regularly. Emily looks at the estimated property taxes and asks Sarah, is this exactly what our property taxes will be next year? Sarah should be careful. Property tax amounts can change, and the way taxes interact with a particular property and ownership situation may require information beyond what the agent should casually guarantee. The loan estimate is providing an estimate, not a permanent promise concerning future Arizona property taxes. Sarah can help Emily locate available property information and encourage appropriate due diligence, but she shouldn't guarantee a future tax bill. The same principle applies to insurance. An estimated homeowner's insurance amount isn't a promise that Emily can purchase coverage for exactly that amount. Then we reach costs at closing near the bottom of page 1. Emily sees 2 numbers that immediately get her attention: estimated closing costs and estimated cash to close. Carlos says, wait, I thought we were putting $80,000 down. Why does cash to close show something different? Because the down payment and cash to close are not necessarily the same thing. Cash to close can reflect multiple components of the transaction. We'll examine those calculations more closely later. But for now, Sarah should recognize that this is exactly the type of number buyers need to understand before closing week. If Carlos believes he needs $80,000 and the disclosure indicates a materially different amount, that's a conversation to have now, not while the moving truck is being loaded. What should the agent actually review? Sarah doesn't need to audit the loan estimate, but she can encourage Emily and Carlos to ask some practical questions. Does the property information appear correct? Is the loan amount what they expected? Does the loan type appear consistent with what they've discussed with the lender? Do they understand the interest rate information? Do they understand the projected payment? Do they understand the estimated cash needed for closing? If something surprises the buyer, investigate it. Surprises are much easier to solve early. Broker tip: ask the buyer one simple question. Here's one of the easiest questions an agent can ask after a buyer receives a loan estimate. Is there anything on the loan estimate that is different from what you expected? Notice what you're not saying. You're not saying, send it to me and I'll approve it. You're encouraging the consumer to actually read the document and identify questions. That's good transaction management. Emily and Carlos now understand page 1. They know the proposed loan amount, interest rate information, projected payment, estimated closing costs, and estimated cash to close. But Carlos turns to page 2 and sees an entire page of charges. Origination charges, services the borrower cannot shop for, services the borrower can shop for, taxes, prepaids, initial escrow payments. Carlos looks at Sarah. Okay, now what are all of these fees? That's exactly where we're going next. Online discussion 1. Carlos notices that the loan amount shown on his loan estimate is different from the amount he believed he discussed with the lender. What should Sarah do? Answer: Sarah should recognize the discrepancy and encourage Carlos to contact the lender immediately for clarification. Because the loan amount is a financing term, Sarah should not independently explain why the lender used a different amount or tell Carlos that the disclosure is correct. She should monitor the issue because a financing discrepancy could ultimately affect the purchase transaction. 2. Emily asks Sarah whether the property tax amount shown on the loan estimate guarantees what she will pay next year. How should Sarah respond? Answer: Sarah should explain that the loan estimate contains estimated transaction and payment information and should not guarantee a future property tax amount. She can help Emily locate appropriate property information and encourage her to ask questions of the lender, county taxing authorities, or other appropriate professionals when necessary. The goal is to help Emily conduct appropriate due diligence without Sarah making guarantees outside her expertise. 3. Why should an agent pay attention when a buyer says the estimated cash to close is significantly different from what the buyer expected? Answer: a significant difference may indicate that the buyer misunderstood the amount of money required, that transaction information has changed, or that the buyer needs clarification from the lender or settlement professional. Because insufficient funds or misunderstandings about closing costs can threaten the buyer's ability to perform under the purchase contract. The agent should encourage immediate clarification rather than waiting until closing.